Hello, cannabis traders and investors. It's time to check in on the sector as things have shifted again, and we're setting up for the potential of weekly consolidation. We have some weakness in the broader market to check in on, and we'll talk about those trend changes that we need to see. Before we get to the charts, we have a free ebook on building a comprehensive trade game plan. It's a link in the description of this video or in the comments. Check it out. So first off, the S&P 500. We're in a daily downtrend. We rejected with a double top at resistance, really a triple top, confirmed the daily downtrend, lower high and lower low to end the week. So the bears are in control, we know that much, and we're watching the weekly time frame because we have a tightening weekly range, and it's going to go one of two ways in the coming 2 weeks to end February. The first is a bear break to a lower low. That's obviously a red flag for anybody that's bullish anything in the markets. We want to see a weekly higher low form, which is scenario number 2. Hold the low and get another bounce going and continue to tighten up. So anything above let's go to SPY. Anything above 420.76 is a weekly higher low. We can see we still have a few percent to work with, about 4% or so. And as far as resistance, it's all the way up at 458, and that is $24 to the upside, as opposed to about $14 to the downside for the bear break. So we're closer to a bear break than a bull break. EMAs here, the 12 and 26, they're closing in on the potential of the first bear cross since COVID. So there's definitely a lot of signals that the bulls are a bit uneasy about, and the burden is on the bulls right now to set this weekly higher low. My hypothesis for the cannabis sector, US cannabis, we have earnings coming up to be keeping an eye on, but for me, if this is our fear low on SPY and we can tighten up, and this is a big if, but tighten up and then break that resistance to put the bulls back in the driver's seat, that is a big vote of confidence for this being our cycle low for USMJ. And what I mean by cycle low is we had our bull cycle where we ran up for a long time post-COVID to all-time highs, and we've been in a bear cycle for 10, 11 months at this point, with a significant weekly downtrend. So I'm looking for the cycle shift, as all of you are as well. But again, if the broader market drops to lower lows and we get a new fresh wave of new fear, it's a big step back and a big red flag. And I will certainly lighten up my core positions that I'm keeping and trading around if that happens. So looking at Canadian MJ first, we got CGC, and it's just losing the daily uptrend. So you start the bounce, you confirm a daily uptrend that tells you the weekly bounce is now underway. Higher low, lower high, lower low. So daily downtrend confirmed, which means zoom out. You can see we're rejecting from weekly EMA 12, which has been resistance for about 10 months at this point. We did get right above it for a minute there on that very quick November bounce, but it's a rejection. So we have a weekly inside bar. That means the range of this week is completely within the range of the previous week. And that means if the low of this week breaks next week, our weekly lower high is very clearly set at 961. And it's then up to the bulls to hold 664, because we have to hold 664 and break 961 if we are to confirm a weekly trend change to the bulls. Anything less than that, if we drop down and break 664, it's just continuation of the downtrend. And it will be no different than any of these bounces on the way down. It's a bounce to cool off RSI. Look at the weekly RSI. We got down to 24. It cooled all the way off to 40, and then a slow grind down again. It got down to 24. It cooled off to upper 30s, and obviously the bulls don't want to see a slow grind down again, but that is a possibility, especially if there's broader market weakness. So that's what we're keeping an eye on. Cron, weekly lower high already set. Rejecting from EMA, broke the low of last week. Only hope for bulls is holding 312 and breaking 413. And from where we stand, it's 41 cents to the downside and it's 60 cents to the upside. So we're a little bit closer to support than resistance. And again, it was just we had the earnings reaction, but higher low, fail resistance, and roll over, losing the daily uptrend. And TLRY, I'm not going to look at all the Canadian MJ names here. They're all very similar. EMA 12 resistance. If the low of this week breaks next week, our lower high is set officially at 748, and it's all about 515 from there. And again, we must confirm the weekly trend change. When's the last time we've seen a weekly uptrend in Canadian MJ? The answer is not since our blow off tops 1 year ago. It's been a long, drawn out downtrend. Broader market is key. So I was talking about recently, over the past couple of weeks, a bullish correlation with this sector and the broader market. And not just this sector, but the growth names in general. And that shifted. I talked about it in my broader market video on Wednesday. And I talked about how it was the first sign, the second half of Wednesday was the first sign that I saw a red flag in the correlation. And we've seen 2 big red days since then. And you can go back and watch that video, the SPY video from Wednesday, to see exactly what it was, because then it wasn't in hindsight. Now, 2 days later, it's in hindsight. But it was the bulls burning themselves out, using up all their energy on the morning Wednesday. And it was both sides of the border did this. And then they just faded and gave it all back. And the broader market was showing more strength during the fade. And then we just rolled over and fell through even further. So the red flags were there pretty early. And that for me was a signal, exit all of your aggressive positions. So again, I got my core and I got my aggressive positions that I go in and out of a lot more often. Today I played the Trulieve oversold bounce on the hourly time frame, just for a little flip, a couple percent to the upside. And again, it's just trading around a core. And when I'm keeping my core, I am ensuring that I have SQQQ, which is a bearish NASDAQ position or something along those lines, so that I have something that's going up while the sector is pulling back to make it less painful on the account. So that is how I'm approaching this sector. And again, I will start to think about trimming that core or exiting that core entirely if the S&P 500 sees a clear new leg down. And again, I use S&P 500 as a guide, and I also use IWM, the Russell 2000, because that is the more high risk, high reward growth focused ETF. And we can see it's an inside bar on the weekly. It's doing the same thing as many of those Canadian MJ names. And if the inside bar breaks bear, which it's looking like it will, we then must hold 188.09. So with where we stand, there's a possibility here that IWM can hold that low, even if SPY breaks bear, but it would just have to be that SPY bear break lacks any follow through. We got about 5.5% until we drop down and break that weekly support. And the S&P 500 has about 3%. So there's a little bit more space for IWM to work with. But again, it'll be a red flag if SPY breaks, even if IWM doesn't, unless it's a bear break straight into a bounce, which certainly happens often enough to keep an eye out for. But bottom line is, the bulls, it's put up or shut up time, because we're either going to resume what we've been seeing the last 10 months, or we're going to say, okay, this time it's different. And the next 2 weeks, pretty much meaning the earnings reaction is going to be critical from here. IIPR, daily sideways equilibrium. And again, the equilibrium is just a series of higher lows and lower highs, clear tightening range, and that broke bear. Earnings are first thing next week, keeping in mind we don't trade in the US on Monday, but IIPR is just looking down at 183 and 178. And if those levels break, it's a weekly bear flag confirming. And that would just be fresh lows and a continued downtrend. Earnings are going to dictate things in the short term, but we're still weak here. So on to USMJ, MSOS. And again, we go back to Wednesday, and Wednesday the bulls started extremely strong. And that was it. That's the climax. That's your volume climax marking the top, and then the bears just control multiple days from there. That was literally the last of the bulls buying, and that marked the top. Just bull exhaustion. Can't go any further. The scale's tilted. So supply and demand, the whole move up, supply is outweighing demand, and then from that moment forward, scale's tilted, and now supply is outweighing demand, which is why we're dropping. So, SPY on the daily time frame here, we had a bull flag attempt, and this is where I was going aggressive. So very brief consolidation sideways, very healthy, and then there's our bull move, and it was such a hard rejection. Bulls used everything they had to get to 25.40. Resistance that was key was 25.63. We failed to break it, and then the bulls gave up. They used everything they had, and that was it. So from here, weekly perspective, EMA 12 resistance, just like Canadian MJ. Again, there's a ton of similarities in how these charts are shaped up. And what we would have to see, it's a weekly inside bar. So if 2296 breaks to start next week, we look for a weekly high or low, anything above 1955, and then we would have to break 2563 for us to say this time it's different. First weekly uptrend since all-time highs. But that's the only way it's going to be different. Bitcoin's doing the same thing. I mean, there's so many names that are doing the same thing here. Bitcoin on the weekly perspective, 3-week bounce, EMA 12 rejection, weekly consolidation underway. And it's the same story for Bitcoin. We're either going to change the weekly trend, and bulls are going to prove the end of multiple months of consolidation, or we're going to fade back down to lower lows. Bitcoin bulls have more space to work with. And again, we can measure the retracement size here on TradingView, Alt F. And Bitcoin here has pulled back. Let me make sure my magnet's wrong. But Bitcoin's pulled back just about 50% retracement. And so we compare it. How much has MSOS given back? Less than 50%. So generally speaking, if you give back 50% or less, then the continuation move is on the table. If you start giving back more than 50%, then just logically speaking, it's going to be that much harder to confirm the trend change. The more you pull back, the more ground you have to make up, the more resistances you have to go through, the more percentage move to the upside, the more bull volume is needed to confirm the trend change. And that's why a bull flag is a very brief retracement of about 38% or less, 382 retracement or less, using those fib levels. That favors continuation. When you start going 50% plus, that's when you favor equilibriums, and that's just what the IIPR pattern was, that sideways equilibrium. So we're going to be watching the size of the retracement, we're going to be watching the volume, we're going to be watching the broader market. It's pretty much what I'm watching for the sector over the next couple weeks. Of course, the earnings as well. And double check all these earnings dates because TradingView often gets them wrong. I can see Curaleaf, they've got here March 3rd. I'm not sure if that's correct yet. Pretty much I look a week ahead and it's not next week, so I don't care. Green Thumb, same deal. Looks like early March. So Tcnf, daily consolidation underway. And here's the move where we shot up and we did confirm a daily trend change here with a higher low and higher high. But then from there, we did not establish support. When you shoot up, you don't establish support. You want stair-step higher lows and higher highs, ideally, so that you're establishing supports on the way up so that when you pull back, you don't just fall right back down. Generally speaking, I mean, we saw it in November. It's better depicted on Canadian MJ names, but we just shot straight up. We did not change any trends and we gave it all back. So just keep in mind that that's one difference between now and November. We have established some supports on the way up with some stair-step pattern, but not a lot. And for Trueleaf, you can see essentially from 1954 all the way up to 2727, we did not establish many support levels. So the pullback here is fairly significant. And again, if we're measuring retracement from the low of the drop to the high of this bounce, we've given back about 40-45% or so. So no major red flags at this point, but if we keep dropping down, we're going to start having those red flags because what does this do? Let's say we set our daily high or low right now. That means from here, we would need a significant percentage move to head back to a higher high. From the low of today, we would need 16% to see continuation. So what that means is the more you retrace, the more you create space for a daily lower high to be the result of the next bounce. And the S&P 500 just did that when it topped out. We pulled back enough here to create the space to reject from resistance and then roll over. IWM just did it as well. Big enough pullback for the daily lower high, and then you confirm a daily downtrend. So for Trueleaf, the next time we bounce, bears and hedging bulls will be making entries. And the trade style there is waiting for the bounce, watching for a loss of the hourly uptrend, entering a bear position, putting your stop over that high. And then the bears hope that the daily downtrend confirms into further weekly consolidation. It's an inside bar as well. Tons of space. Anything above 1846 is a weekly high or low. We can drop another 20% before we would break that weekly support level. But I'm scouting a daily lower high to be the result of the next bounce. And there are some times where I'm in a position and say, well, I have a little bit too much exposure. Maybe I'll exit half my position on the bounce for the daily lower high. And the hourly bounce that I played today, just hourly oversold conditions. It took a long time to play out. And I got a really good fill. My fill was 24. Whenever I make claims like this, I need proof. But my fill was 24.10. So bought 23.67 and sold 24.10. And again, just a little day trade. And what that does is, it's not much proof, but that was it. What that does is that little 2% bounce, it's about 2%, just under 2%. So if I do a little day trade for an hourly oversold bounce with the same size position as my core, I drop the break even on my core position by over 1% every time I do that. So that's why I have day trading positions and day trading account and core swing trading account to maneuver around. And what we are looking for, like everybody else, this would be an inverse head and shoulders pattern as a possibility, which just shows a lower high, lower low, nice bounce to get to that resistance, but fail to break it, higher low, higher high. Just shows you going from a downtrend to an uptrend. So resistance was 27.44. We topped out at 27.27. I'm considering that a double top. So double top at resistance must confirm the weekly trend change. And we have seen a weekly trend change before on Trueleave. That was a weekly trend change that lacked follow through. That was when Trueleave was standing out as easily the lead USMJ bull before we rolled over to that most recent leg down. Its story's the same for everybody. Weekly trend change is needed. If you're thinking bigger picture, don't even worry about the daily trend. You know, if you're an investor or longer term or swing trader, all you're watching is the weekly. Daily is too zoomed in. And that's why, you know, the people that are long term and checking their account every single day and checking Twitter every single day, that's why it can be, it's a lot of fun in a bull market and it is brutal and depressing in a bear market. So Curaleaf is looking for a daily higher low, and a lot of these lower wicks are MSOS, the ETF, buying at the end of the day. And I assume that they started doing that at the end of the day to offset. Remember when we used to see the shorts coming in at the end of the day for that cash subscription? I'm not going to go into the details of that. I made a video about it, but it's offsetting that to a degree by holding that buying to the last hour. And again, traders can take advantage of this. We've got traders that 3 p.m. rolls around, and it's not every day. Yesterday, we didn't really see it, but 3 p.m. rolls around and traders look to jump in. So let's just look at Trueleaf as an example of that. If I'm a day trader and I know around 3 p.m., MSOS usually does some buying, the low of the day on Trueleaf is 23.45 into the close, into the last half hour. We bounce off 23.44. It's a double bottom by a penny. And then from there, we didn't close that strong, but from that low, within the next 20 minutes, we ended up with over a 2% bounce. And traders take advantage of that. You know, if it's MSOS putting in 50,000 shares of buying, you'll see a good bit more, 50,000 shares, because it's traders jumping in to ride that momentum for a little. I mean, if you get a little 1% move at the end of the day, it's worthwhile for us traders. So Curaleaf doesn't look as weak because of these lower wicks, and we had a little support at 810, and the low today held that. We need an hourly trend change. Again, it's just all that buying at the end of the day. It's what I call painting the close. And I used to do it when I was trading penny stocks. You know, we would have a bunch of us in a bull position, and you can have the price close 1% under the high of the day or at the high of the day. And we would ensure with just, you know, a little 100 share buy at the close to have it close as high as possible. And that's to a degree what the ETF is doing here. And it's a bit misleading. You look at this daily candle, you say, oh, the bulls bought the dip. When really, you know, it's just the ETF at the end of the day, the last 30 minutes. And it changes the tone because you have to zoom in. I look at that and say, well, we dipped down, but bulls defending EMA 12 support and nice buying that dip. But in reality, not really the case. Yes, there was dip buying, but not the kind of, again, it's a different, you know, this kind of move as opposed to a 5-minute uptrend at the end of the day tells a different story. So if we see on the weekly time frame here, again, resistance 954, we topped out 928. If we break the low of this week, next week, we scout the weekly higher low, anything above 690. Again, Again, we got a lot of space to work with, but the trend changes are needed. And I look at a candle like this and I say, okay, I'm scouting the weekly lower high, but it may not be set yet. And it's obviously a much different close than MSOS, which closed right down near the low of the week. GTBIF also still in a daily uptrend, trying to set a higher low. So obviously best case for the bulls would be broader market strength. And to start next week, maybe if there's nothing over the long weekend with Russia, maybe bulls perceive that as something to be a little short-term catalyst. But obviously if we can break the high of this bounce, it fends off weekly consolidation taking place. Anything under 2347 is just a weekly lower high on green thumb. And again, it's another little inverse head and shoulders attempt where if we reject from that level into weekly consolidation, pretty much, if these earnings are indeed in early March, which it appears they are, that's pretty much the earnings reactions are going to dictate how these weekly charts shape up. If they're bearish reactions, we're going to be right back down testing our lows. And if they're bullish reactions, then we're going to have some notable space to work with off of those lows. Cresco, again, I hate these OTC opens. It's not, look at that 5-minute candle to start the day. It's not indicative of price action. There's way too much power for market makers to shape candles the way they want when there's no extended hours trading. You can't, the fact that it opens at $7, again, it's a form of manipulation for me. 6% lower open, straight into a however many percent bounce on the 5-minute. It's just ugly. It's not clean price action. So we got a support level of 686. And if 686 breaks, it's a confirmed downtrend. Higher low, lower high, holding support for now. But if that level breaks, it'll be a downtrend. We zoom out into weekly consolidation. The difference with Cresco, we broke weekly resistance. So that's notable. And that's a good thing, obviously. But we still need a trend change. It's a weekly inside bar. If the inside bar breaks bear, we scout a weekly higher low. Must confirm the follow through. Verano. Pull back here again. It was all, in my opinion, MSOS buying at the end of the day. We'll have to see. But just does not paint the picture. Look at that candle. Complete bear control all day. And then at the end of the day, painting the close. So you look at this and say, bulls are buying the dip. We're looking for that daily higher low. Not indicative of what the price action was throughout the day. So anything under 1394 is a weekly lower high. And we're just tightening up here. It's an equilibrium where you got your low, high, higher low, lower high, higher low. And if we fail 1394, just another lower high. And this will be the one to watch as far as a prolonged tightening range, because when prolonged tightening ranges break, you see volume and volatility spikes. And as a trader, that means opportunity. So I'm always scouting equilibriums to trade within. I buy the test at $10, put my stop under 986. I don't stop out. I sell a little bit on the bounce as long as it keeps playing out. And then you just know we get tight enough to a certain point where the volume and volatility spike are incoming. And that's what we're going to be watching for if we break 1187 and start that weekly consolidation. On to the quick check-in of the psychedelic space. So Compass CMPS, fresh all-time lows, bears in complete control. But it's the same thing. Weekly 3-week bounce, EMA 12 resistance. It's the same thing with Bitcoin, same thing with psychedelics, same thing with MJ, same thing with growth stocks. They're all doing the same thing. So we're watching all these pieces of the puzzle. I'm not just looking at one company here. I'm looking at an entire sector and how it's trading to 4 other sectors. Weekly inside bar, if it breaks bear next week, we look for a higher low, anything above 79 cents. Bulls must confirm the first weekly uptrend since we topped out at the all-time high. Same story, no difference. And ATAI, same story. That's a potential weekly bear flag. Not even a big enough bounce to test EMA 12 resistance. Trend change will be needed. We know the result of this weekly bounce is going to be a lower high. It's just a question of where, because there is so much space for it to form. Broader market is key. IWM, Bitcoin, I look at them for clues. But in the end, broader market and earnings reactions are going to be the most impactful things here over the next 3 weeks. If SPY drops to the lower low, it'll definitely be an initial red flag. IWM is more important to me than SPY for this sector specifically. But that is where we stand. A dog snoring. All right. Hope you have a good weekend. Feel free to ask any questions.